Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, US millionaires support Joe Biden's plan to tax super wealthy, polls show, as well as that China agrees to talks with EU over EV tariffs, and as well as that Linda Yaccarino shakes up X amid pressure from Elon Musk over costs, and finally Netanyahu says end of intense phase of Gaza war is very close. We'll come to that. We'll come to the charts near the end, though, of course, along with the economic calendar, so make sure you stay around so you can see that. Before we get straight into the vote, make sure you subscribe. The first article to talk about is to do with US millionaires. Now, the top US millionaires have now signaled their support for Joe Biden's initiative and policy commitment to make the wealthiest Americans pay more in tax. This comes in a new sign that the president has great plans to impose larger levies on the extreme wealth that is sitting tight with the nation's upper middle class. Now, we haven't actually spoken too much about Joe Biden's specific economic policy, but I'm sure if you're a kind of regular viewer of the channel, you've noticed that we have kind of covered the US election race so far, quite extensively, and we've gone over the kind of key policy points from both Joe Biden and Donald Trump. We've also spoken about key regulators and key think tanks and their warnings to the US to do with the election period about the kind of growing issue of debt and the way we're kind of nearing, or at least the US is nearing, this debt catastrophe, it does seem like, as both leaders kind of promise, or both potential leaders kind of promise increased spending, and they're kind of not supplementing that with the tax revenues or other revenues which would kind of make up for that the great increase in spending. And so that's kind of been a key worry from those institutions, and we haven't actually seen either Joe Biden nor Donald Trump respond to that. Whilst we have also spoken about Trump's tax plans, that's kind of been a key policy that we've spoken about before. We haven't spoken about Joe Biden's tax plans as much. We know that Joe Biden has spoken about taxing individuals more, but we haven't really heard the specifics of that. Whilst we have heard from Trump, of course, the kind of specifics of he wants to continue his current tax policy, his current tax cuts, which he implemented during his past presidency, and he would look to continue those rather than them ending at their scheduled date. So that's kind of been the key difference in economic policy that we've highlighted. So Donald Trump focusing on those tax cuts, whilst we've seen Joe Biden look towards increasing spending far more than Trump, and as a result both are looking at increasing the national deficit, it does seem like. What this topic though does kind of hint towards is a possible scenario in which Joe Biden is actually achieving greater fiscal solvency than someone like Donald Trump. Why this is so important to of course cover is because markets price this in. When we're approaching the election period, whichever president markets are looking at being more fiscally disciplined, the president which they believe will be more accountable when it comes to finances, the president that they believe will spend less, tax more, that kind of thing, all these things really, even foreign policy or domestic policy, which can affect volatility and security of the nation. All of that massively gets factored into the market as markets price in the chances of this happening, or the kind of what might happen to the economy if this policy gets implemented, and that sort of thing. And then polls, of course, as we get closer to the actual election date, or during the kind of election day and the days following, the markets then really start to clock in, and volatility kind of goes crazy, as the markets then do factor in which president's polling more than the other, and therefore how that economic policy, how that domestic foreign policy, whatever, is going to affect markets, and then that gets priced in. So ultimately, that's a long way of saying that this is a very important topic to, of course, cover. But we haven't actually spoken much about, who's going to side with Biden in this election. We've mostly spoken about who's siding with Trump, and it has seemed like the majority of the public are backing Trump when it comes to, topics like the economy specifically, but even in other areas, and the kind of dissatisfaction, it seems like, is there to do with Biden's policy or Biden's reign, and that's despite kind of positive numbers when it comes to his performance with the economy and with other sectors, which you can kind of analyze, but because of course the kind of feelings that inflation does bring, with kind of driving gas prices higher, that's kind of a key indicator to members of the public, to how the economy is doing. And because that's been high recently as a result of a multitude of factors, Biden's economic score when it comes to voters is very, very low, and that's why we're kind of that's why it's kind of interesting to see that the super wealthy are seeming to back Biden far more than maybe we're seeing now in the lower income territories, which traditionally the Democrats perform well with. With a recent YouGov poll of Americans with assets other than their home worth more than $1 million, showing that a majority supported a more progressive US tax system. This more progressive US tax system is a key tenet to Biden's economic strategy. Nearly 60% of those that responded to the poll said that they would back marginal rates above the current top rate of 37% on income tax, above the $100 million mark. More than 60% of such respondents also said that they viewed rapidly expanding inequality as an extreme threat to democracy, or to the democracy of the United States. An astounding 91% of respondents then agreed that the concentration of wealth in such higher economic classes allowed them to buy political influence. A slightly lower figure of 75% said that the wealthy had an unfair access to tax loopholes. Biden has ultimately made his progressive tax policies a key left-wing selling point. So a very interesting policy point there from Biden, and a very interesting poll, of course, showing that Biden is backed, and backed by the super wealthy. That's all to talk about on this article, though. Next article to talk about is to do with China and EV tariffs and that kind of thing, which of course has been a very important topic that we've covered in to a great extent recently, as this issue has grown, as kind of more individuals have commented on it, and we've kind of seen the fallout as a result. Now, China has now agreed to enter talks with the EU following their decision to impose higher tariffs on the imports of Chinese electric vehicles. This came during a visit to Beijing by Germany's Vice Chancellor in a new effort to soothe the currently heightened tensions. Now, of course, the heightened tensions across the world has been a topic that we've covered on this channel, but especially these recent comments over EV tariffs, and actually the recent implementation of such EV tariffs by the West, by both the US and EU, has kind of heightened these tensions further. As we kind of often see issues grow within the world when we start to see these kind of breakdowns in free trade, it does seem like, or at least that is the kind of common topic, or common belief. And therefore it's important to highlight and understand. Now, why we've seen these tariffs? Well, ultimately, not only have certain governments worried that this is affecting jobs and that kind of, and affecting therefore the kind of economic conditions of different nations, but also many nations, especially the EU, the EU body in this case, is very much worried with the kind of topic of subsidies within China, as we have seen recently kind of this explosion in EV popularity across the world, or at least we've seen a grow in the trend of the popularity for EVs. Whilst that has slowed down recently, it's still there somewhat, and China's really invested greatly into this kind of EV industry and is really producing a great deal of Chinese EVs. We've seen a multitude of manufacturers kind of coming out and getting involved, and as a result of that, we've seen lots of Western companies really start to struggle, not only in China's market but also around the world, as a result of this kind of new market participant. And ultimately, the EU is worried that the reason why we're seeing this explosion in Chinese EVs, why we're seeing so many EVs being exported at such a low cost, which is dominating the market as a result, this is because of Chinese subsidies. And therefore the EU did launch this subsidy investigation about a year ago, I believe, and that kind of required or requested these Chinese EV manufacturers to cooperate with the EU on this topic. Some EV manufacturers have, some haven't, and as a result, that kind of tariffs have been, imposed on such EV manufacturers accordingly to those that were willing to coordinate and those that weren't. This move, though, obviously tries to settle those nerves which it came about as a result of that kind of tariff imposition. And it'll be very interesting to now see what kind of things can be agreed upon, what solution can kind of be imposed as a result of these kind of this trade breakdown, if any, and kind of what kind of can come of this will be very interesting to see. So definitely keep your eyes on this topic, a very interesting one nonetheless, and one that's affecting Tesla and other car manufacturers around the world. So always think about that as well. Next article we'll talk about, though, is to do with X and Elon Musk, and that topic that we're always covering, it seems like, as only a year after she became CEO of X, Lunida Yaccarino has now shaken up her inner circle at X heavily. This comes in a new effort to boost sales and cut costs following pressure from Musk. Now, of course, we've seen a great deal of kind of policy changes to do with X, formerly known as Twitter, since Elon Musk, of course, acquired the company and started to kind of make it his own. Of course, that kind of name change being a very instrumental change to the X, to the Twitter brand. Some people, of course, still fail to acknowledge it, or choose not to acknowledge it in a kind of movement against Elon Musk's ownership. And some have even questioned the kind of ability of Elon Musk when it comes to X, and the choices that he's made, of course. Now, what Elon Musk has done recently, though, with his policy changes, is he has, of course, implemented a new CEO, or he did at least, I think, around a year ago, as ultimately, he did note how this kind of would take up too much of his time and that kind of thing, which does make sense, of course. Now, why this is kind of an interesting topic to note, though, is because we have now seen this kind of new CEO, or CEO in general, basically implement certain policy changes, which is starting to already aggravate certain advertisers that exist on the X platform, which were already kind of annoyed with Elon Musk's ownership and the changes that Elon Musk was making. And we will get into that, with her latest policy change being to roll out new adult content options. This policy backfired after failing to tell advertising clients about the changes. So that's the kind of key misstep there by the CEO, and it'll be very interesting to see the fallout from this. Or kind of the chain reaction from this, as we could now start to see other advertisers pull from the company, and that kind of, and then we really start to see the fallout with X. So it's always interesting to see how Elon does deal with these issues, and his adaptability, of course, is something to kind of be admired sometimes. So it will be interesting to watch. So definitely keep your eyes on this topic, as it is also affecting kind of topics to do with other tech giants as well. So keep your mind on that. Last article to talk about, though, is to do with geopolitics, with Netanyahu and Gaza. Now, Netanyahu has now said that the war is at an end of its phase. This comes as he and other officials, hint to the prospect of redeploying its forces to the northern border of Israel, where new operations are expected, with Netanyahu's comments referencing the war between Israel and Hamas, which has been waged since the October the 7th massacre and attack. He did, however, continue to insist that Israel will continue to fight Hamas until Hamas is destroyed and they free the estimated 120 hostages that they still hold. The key change, he said, would be to switch to low-intensity fighting, where Israel would be able to shift their capabilities to the north. When talking about the northern border, he did say, however, that he had hoped a full-blown war against Hezbollah can be averted if needed, Israel would face the challenge. He went on to say that Israel is capable to fight on several fronts. So interesting comments there made by Netanyahu. And of course, this topic is very important to understand when we're looking at world tensions, and how that affects key assets, especially things like oil, of course, which are currently which price is currently on the rise path. pardon me. So of course, any escalations to do with the wars in the Middle East will definitely, have an effect on that commodities pricing and that kind of thing. So that's why it's important to note. That's all to come out on the articles, though. We spent so much time on the articles, so we'll actually have to spend a little less time on the charts, which we're going to next, of course. As like always, we're starting on the US 30, but we'll get straight into it as the Dow Jones last week ended off by pushing up into this kind of higher area of price and has reacted to this kind of key area of liquidity that we had noted had previously acted as a key area of resistance, a key all-time high level before, then a key area of resistance again, then key area of support, then key area of resistance, then support, then resistance, and now it does seem like it's acting as an area of resistance once again, as price has now spiked into it twice. So it will be interesting to see whether we sell off from that area, or in fact will we kind of just continue this consolidation pattern that seems to be forming, and almost small ranges seeming to form now between those two key liquidity zones. So it will be interesting to see where price does move from that level, and whether price can break above this key liquidity zone and make some a push to the upside, or in fact will we now see a sell-off somewhat or retracement. If we do see a retracement, of course a Fibonacci retracement tool is always an important or useful tool to kind of use to analyze the charts, and that 50% Fibonacci retracement level does of course line up with those key smaller areas of liquidity that you can kind of note around those previous areas of accumulation and distribution. So definitely keep your eyes on the US 30. Lots to think about, of course. Next to talk about though is the dollar, which also ended off the week kind of pushing to new highs, breaking above that kind of recent high made on the 14th of June, and is now at levels not seen, of course, since the 1st of May. So very key moves made over the course of last week. The question will be, though, whether over the course of this week, price can then make its way all the way up to that minus 27.2% Fibonacci extension level. As during last week, when we then saw this swing to the upside, that swing seemed to be triggered by, of course, the reaction to that 38.20, or at least was spurred on by that 38.20, in addition to, of course, the fundamental context. As a result of that, we look to see price reaching those Fibonacci extension levels, usually after we see such a reaction, and that Fibonacci extension level is, of course, that minus 27.2% that I've got noted up there around the 106.2 level. So definitely keep your eyes on the dollar. Next to talk about though is Euro USD, which is seemingly forming this double bottom around this lower level of liquidity that seemingly was formed or last touched around the 1st of May, 30th of April. So definitely keep your eyes on this action on Euro USD. It'll be interesting to see now whether we kind of react once again from this area of liquidity and swing to the upside, or in fact do we, is there not the kind of upside liquidity for price to stay above this key area, and therefore will price break below that key zone and move to these lower levels around that Fibonacci extension level and key liquidity zone, which is kind of the bottom of the market made on the 16th of April. And if we break below that, we're reaching levels not seen, of course, since November 2023. So very key moves being made on Euro USD. Definitely keep your eyes on it. Next to talk about though is pound yen, which is certainly on the upswing, or at least ended off the week on this massive upswing, as we now near the kind of Fibonacci extension level, the minus 27.2% Fibonacci extension level that we've been, kind of looking at price reaching all the way since, of course, price made its way down to that 61.80 back on the 4th of June. So that's how long these moves can take to actually, for price to reach those key levels. Last week we had a lot of pound and yen data. I believe British inflation rate and British inflation rate and Japanese inflation rate, plus British interest rate decisions. So lots of British and Japanese data that came out, and as a result of that, the bullish message for pound yen has remained, and as a result of that, price is now pushing once again towards new all-time highs, or is currently making new all-time highs. So definitely keep your eyes on pound yen. Next to talk about though is Bitcoin, which is just continuing this sad, slow, long trend to the downside, as since the kind of 7th of June, price has slowly trended to the downside and is now, kind of at the $63,000 a Bitcoin level, not last seen since, the 15th of May when we kind of had this bullish spur once again. It is sometimes important though to zoom out and get context, as price is still within this kind of top area of liquidity, not top area of liquidity, top area of price, these all-time high levels of price, as if we do zoom out, you can kind of conceptualize that price is still at these very kind of, these very high levels, and so, the kind of doomer image for it isn't, too real just yet. And of course, we'll have to wait and see based on the Fed's interest rate decisions and that kind of thing before, any moves on Bitcoin are made. Next to talk about though is gold, which, at the moment has made its way or ended off the week, reacting to that 78.60 Fibonacci retracement level that we noted out. So a very key move there taking place on gold, with price now kind of once again re-entering this bearish flag that we thought was forming, but seemingly didn't act out the way we expected it to. So definitely keep your eyes on gold as price makes its way back down into these key areas of liquidity. Last to talk about though is oil, which remains within this kind of top range, this small range that's formed as prices kind of moved to the side over the course of last week, and prices consolidated, but still, oil remains at these very high levels near and around the $85 a barrel level, which is of course a very significant price level that's previously acted as a strong area of resistance recently. So a very key level indeed. And of course the news to do with the Middle East and that kind of thing is heavily impacting the price at the moment, so keep your eyes on that. That's all to talk about in the charts though. We've got lots of economic data coming out on the economic calendar, so we'll get onto that quickly. Firstly we're receiving the Canadian inflation rate figure, followed by the US consumer confidence figure, and then the German consumer confidence figure. Followed by that, we're receiving the US durable goods orders figure, as well as the US GDP growth rate figure, as well as the British GDP growth rate figure. Followed by that, we're receiving the French inflation rate figure, as well as the German unemployment rate figure and the Italian inflation rate figure. Followed by that, the US inflation data, some US inflation data, and finally the US consumer sentiment figure. So lots of very important economic data to listen out for this week. But we've got lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.